Alright, today I'm breaking down SCHG, the Schwab U.S. Large Cap Growth ETF in plain English. Here's the quick hook. SCHG gives me broad exposure to America's fastest growing large cap companies at an ultra low cost. If I want the growth side of the U.S. market without picking individual stocks, this has been a go-to core holding for a lot of long-term investors. Ticker, SCHG, issuer, Charles Schwab, inception date, December 11, 2009. Expense ratio, 0.04%. That's $4 per year on every 10,000 invested. One of the cheapest growth ETFs out there. What it tracks: the Dow Jones U.S. Large Cap Growth Total Stock Market Index. It screens the largest U.S. companies for faster revenue and earnings growth, higher price momentum, certain valuation characteristics, and then weights them by market cap. Holdings. It owns roughly 240 to 270 stocks at any given time, and it's concentrated at the top. The mega caps drive a lot of the movement. Apple, Microsoft, Nvidia, Amazon, Alphabet, both share classes, Meta Platforms, Tesla. Broadcom, Eli Lilly, Costco. I always check Schwab's fund page for the current top 10 and exact weights because they do change with market moves and index reconstitutions. Dividends. This is a growth fund, so income isn't the main event. SCHG pays dividends quarterly. The amount varies based on what the underlying companies pay. Historically, the trailing 12-month yield has generally landed around 0.5% to about 1.0%. If I need the precise current yield, I look for the latest 30-day SEC yield and the trailing 12-month distributions on the fund page. Those update frequently. Earnings. ETFs don't report earnings like a company. What matters is the earnings power of the portfolio. The index tilts toward firms with stronger historical and projected earnings growth. Check the fact sheet for weighted average PE/PB and long-term earnings growth rate. Performance and risk. SCHG is more volatile than a broad market fund because it leans into growth. In strong tech-led markets, it can outperform. In value-led or rising rate environments, it can lag. I compare it to the S&P 500 and to a value counterpart to see the style swings. Costs and structure. No load, no performance fee. That 0.04% expense ratio is the ongoing cost. Trading spreads are typically tight due to high liquidity, but I still use limit orders. There are no guaranteed capital gains distributions, but like most index ETFs, it's generally tax efficient. Who it's for: if I want large cap growth exposure, Apple, Microsoft, Nvidia in a single low-fee wrapper, SCHG does exactly that. If I prefer balance, I pair it with a broad market fund or a value tilt to smooth the ride. How I research it: fast. Check Schwab's official fund page for the latest holdings top 10 fact sheet. Look at the current 30-day SEC yield trailing 12-month dividend total. Review the index methodology and the most recent reconstitution date. Bottom line, SCHG is a straightforward, low-cost way to own U.S. large-cap growth. Expense ratio, 0.04%. Quarterly dividends, roughly 270 holdings tracking the Dow Jones U.S. Large Cap Growth Index. Know the style tilt, and